All right, let's dive into one of those head scratchers from the world of tech and finance. You know, when a company comes out with just incredible, record-breaking news and its stock immediately takes a nosedive, we're going to unpack that today.
So picture this. On one side, you have Palantir's third quarter results, an absolute monster of a report. Revenue just exploded, up 63%. And profits? They shot up an unbelievable 231%. I mean, those are numbers that should make a stock go to the moon. But then, you look at the other side, the market's reaction. The stock price immediately dropped by over 4%.
So the big question is, what in the world is going on here, right? Did Wall Street see something that the rest of us missed? Is there some hidden bad news? Or is something else entirely at play? Well, we're going to get to the bottom of it, and the answer is a fantastic lesson in how the market really works.
Okay, so first things first, let's just build the case. I really want to show you just how undeniably incredible this quarter was for Palantir. The evidence you'll see is just overwhelming.
Let's start with revenue. Palantir pulled in over $1.18 billion. And that's not just a big number. That's a 63% surge from the same time last year. You just don't see that kind of growth in a company of this size. It's almost unheard of.
And, you know, it's not just about how much money they made, it's about how much more they made than anyone expected. Their earnings per share didn't just squeak by the estimates, they absolutely smashed them by more than 23%. That tells you the company is running incredibly efficiently.
And if you want to talk about the company's overall health, there's this great metric in the software world called the Rule of 40. Basically, you add your growth rate and your profit margin. If that number is over 40%, you're doing great. Well, Palantir's score was 114%. That's what prompted their own CEO to call it, and I'm quoting here, the best performance in the history of software companies.
So here's the kicker. It wasn't just one lucky number. Look at this table. It was a clean sweep. Revenue, beat. Earnings, beat. Operating income, beat. Across the board, they didn't just meet expectations, they shattered them. This is what Wall Street calls a beat and raise quarter. It's literally the gold standard. And yet, the stock still fell. The mystery just keeps getting deeper, doesn't it?
All right, so now it's time for the reveal. To solve this whole paradox, we have to stop looking at the results for a second and start looking at something else entirely. We have to look at expectations.
So it's not really one single thing, but a mix of three key factors. First, the stock was already priced for absolute perfection. Second, there was just a tiny hint of a slowdown on the horizon. And third, you've got these bigger fears about the economy that were just making investors nervous. Let's break each of those down.
First up, that sky-high valuation. You have to remember, in the year leading up to this report, Palantir's stock had already rocketed up over 400%. So the market wasn't just hoping for a great quarter, it was expecting a miracle. It's kind of like the stock had already been given an A+ grade, so when they report another A+, well, that doesn't really raise the grade, does it? All that good news was already priced in. Second, that super subtle slowdown. So Q3 growth was 63%, right? But the company's own forecast for the next quarter hinted at 61% growth. Now, let's be clear, 61% growth is still absolutely spectacular. But for these high-frequency, momentum-driven traders, even a tiny 2% slowdown can be a signal to sell and take some profits off the table, especially when a stock is flying that high.
You know, there's a fantastic quote from the source material that just nails this idea. It brings up the greater fool theory. That's the idea that you can buy a really expensive thing because you think there's always a greater fool out there who'll buy it from you for even more. Well, in this case, the stock hit a ceiling. There just weren't enough new buyers willing to pay an even higher price for slightly slower growth. The momentum just paused.
Okay, so we've cracked the code on the stock drop, but let's pivot for a second. What was actually powering these record-breaking numbers in the first place? Well, the answer is one of the hottest topics in tech right now, artificial intelligence.
And this chart, wow, this chart tells you everything you need to know. Their U.S. government business is solid, right? Growing at 52%. But look at their U.S. commercial business. We're talking regular companies here. It grew a mind-blowing 121%. That's the real engine roaring right now.
So what's the catalyst? It's Palantir's artificial intelligence platform. They call it AIP. And this thing is a total game changer for them. It lets companies take their own messy data and start using AI with it, like incredibly fast. Something that used to take months of consulting work can now be up and running in days. And that lets Palantir sell software that can scale, which is way more profitable than just selling man-hours. That's the secret sauce behind that 121% growth.
But of course, it's not all sunshine and rainbows. You know that any smart investor isn't just looking at the good news. They're always looking down the road for potential risks that could mess things up.
And this chart points to a big one, geographic risk. A full 75% of Palantir's money comes from right here in the US. Now think about this. If the whole company grew at 63%, but the US part alone grew at 77%, well, that can only mean one thing. The international business is basically flat. And that's a huge question mark for future growth. So if you boil down the main worries, they're these. First, that international stagnation. Can they really get the same success in places like Europe? Second, their government business. Yeah, it's stable, but it's also slower and can get caught up in political drama. And finally, can they keep this up? Sustaining this kind of hypergrowth is the central challenge for any company like this. So if there's one big lesson to take away from all this, it's this. In the fast-paced world of the stock market, the reality of today is often way less important than the expectations for tomorrow. Palantir delivered a phenomenal reality, but it just couldn't quite clear the bar of impossibly high expectations.
And that leaves us with the ultimate question, doesn't it? Is this a company whose best days are already priced into the stock? Or with the power of this new AI platform, is this growth engine just getting warmed up? That right there is the multi-billion-dollar question. Thanks for tuning in.